Natural gas prices continue to decline following a bearish EIA storage surprise, with traders closely monitoring supply fundamentals and key technical levels for signs of support. On the fundamental side, the market had expected a 77 billion cubic feet storage build, smaller than the 5-year average of 94 billion cubic feet, which could have offered mild bullish support, but the data came in higher than anticipated, triggering a sharp sell-off and sending prices into a continued freefall. Moreover, several bearish factors dominate sentiment. U.S. production remains high, averaging around 106.8 billion cubic feet per day, up nearly 5% from last year. The EIA also raised its 2025 output forecast to 107.1 billion cubic feet per day, signaling that supply strength is likely to persist. Meanwhile, LNG exports have flattened, limiting additional demand from abroad, and storage levels are roughly 5% above the 5-year average, leaving little room for bullish surprise unless weather turns sharply colder. Moreover, weather models point to warmer than normal temperatures through mid-October, especially across the southern and eastern U.S., reducing heating demand just as the market transitions into the early winter season. In Europe, inventories are around 83% full, slightly below the typical seasonal norm but still high enough to prevent major supply concerns. These conditions combine to create a neutral to bearish short-term outlook unless the next EIA report shows a much smaller injection than expected. From a technical perspective, prices are holding just below the $3.30 threshold, which has acted as a strong support level. A sustained break below this level would open the door to further downside, with the next key supports at $3.20 and $3.15. On the upside, resistance stands near $3.50, a decisive close above that range could trigger renewed bullish momentum. Overall, the $3.30 threshold and the upcoming EIA reports remain the pivotal factors for near-term direction. As the storage report surprised with a larger-than-expected build and prices remain below $3.30, bears may press their advantage, making a deeper slide toward the $3.20 level increasingly likely. In summary, near-term natural gas prices are leaning toward the downside, with roughly a 65% probability of further declines toward $3.20, while the likelihood of a short-term rebound remains around 35% if minor support holds or if weather and LNG demand provide unexpected strength. Please don't forget to comment, watch the previous video, and show some love for the channel. See you next time.